Hey, fine people at YouTube. This is Ryan with TrendLizard.com. Hope you're having a wonderful day. I've been getting a lot of requests lately to take an updated look at what's going on in the overall stock market during this whole coronavirus period. What's happened? I've put out some videos before looking at the impact of the coronavirus and the crash and the subsequent recovery. Since then, I've had a lot of requests to update that analysis. I'm going to do that basically using the SPY and the S&P 500 to show you where we think we are in that Elliott Wave progression on all time frames, just to give you a good idea of the type of stuff we're doing every single day at TrendLizard.com. I hope you come visit. I hope you sign up, all that good stuff, because that's what this is all about, bringing Elliott Wave to the masses. In addition to the S&P 500 analysis that we're going to do, we're also going to take an updated look at the Nifty 50 by popular demand. I get a lot of requests for that. Obviously, a lot of people in India follow the Elliott Wave theory, so I am here for you, and I want to make that as understandable as possible to you as well. So we're going to take a look at quite a few charts. It's been interesting in September. I'm sure people are a little bit scared. We've gone through a relentless up move for 5.5 months. That seems to have paused and pulled back in September, and I want to show you the impact of that move and what to expect from the market heading forward. So we're going to dive into the charts, get comfortable. Here we go. Okay, folks, like I always like to do, I'm going to start from a very long-term time frame and zoom in from there just to give you a full perspective. I'll try to keep it quick because this gets fairly repetitive the more videos we do on the same market or index or whatever else. So like I said, a lot of these charts that we're going to do to analyze the stock market as a whole right now is going to be SPY, the spiders, which is the S&P 500 ETF, which is the most tradable way or easiest way to gain access to the S&P 500 for a trader. So here we are. Here's the long-term time frame, and basically I want to start with this point of view because it's very important right now. Now, on a long-term time frame, I believe there are two different ways that you can look at things in the context of the advance off the 2009 low. We're going to take a look at both of them. One way to look at the advance off the 2009 low is as a five-wave move, 1, 2, 3, 4, 5, that ended in 2018 and then underwent a correction. It ended up being an expanded correction because it set a new high as well as a new low later in 2020, but an expanded ABC pullback that completed in 2020, and now we're embarking on a new five-wave long-term uptrend. That is one possibility. Let's look at the other possibility. The other possibility is that we are still in that advance off the 2009 low. You have a second wave, a massive third wave, and then that same expanded move, but we call it a fourth wave, putting us in the fifth wave now. Obviously, there's a huge difference between these two possibilities, and it depends on which other market indexes you look at. If you're trying to find support, what makes more sense? If we look at the NASDAQ, this looks correct. It looks like we're still in that five-wave advance off the 2009 low. There was never any larger pullback. However, if we look at the Russell 2000 or the NYSE, New York Stock Exchange, this possibility where it says we completed a five-wave move and have corrected it and then are starting a new five-wave long-term uptrend actually makes a ton of sense. It's really, there's no guaranteed way to say which is the case right now, but it is applicable because if we are finishing a five-wave move, you'd have to be concerned in this area that maybe we're nearing an end to that entire advance, that we didn't complete it, the 2020 pullback was just part of a fourth wave, and we're in that fifth wave. So that is something to think about. We do not believe by any measure that the high that's recorded in September could be the high to the advance off the 2009 low. And I'll show you why as we progress, but we do not believe that is the case. And again, I'll show you why. So for now, we're just going to go ahead and zoom in on the advance off the 2020 low to see what we can find. So let's go ahead and do that. Here's the advance off the 2020 low. The weakness that we're seeing in September makes us believe that the advance is a five-wave move that completed in late September, at least on the SPY, and that a correction of that five-wave advance is now beginning. That means we're in the largest pullback we've seen since that coronavirus crash back in February and March, and it means that we should head lower before we head higher, right? Okay, so if we're correcting this up move, it lasted 5.5 months. So if we get a correction to that move, it stands to reason that we'd be getting at least a month, probably 2, maybe even a 3-month pullback to correct this five-wave move. There's no real hard and fast rule on this. Some people use Fibonacci time retracements. I don't find them super reliable in my work, but I do expect it to normally take about 50% of the time that the 5-wave advance took to play out. So that's the time factor. The other thing we look for is we look for a Fibonacci retracement of this up leg here. So to get a Fibonacci retracement of this up leg, we would be looking for a 38.2% retracement of this up leg, all the way down to a 61.8% retracement of this up leg. So for that to happen, for us to achieve a Fibonacci retracement, we would see the SPY move down into this area here, which ranges from about 270 to 300. Long story short, we believe a larger pullback is at hand here, that the up leg off of March's low has completed, and that we are now correcting that up leg. If we take a look at QQQ, just to put it into a different perspective, it was a very straight line move, and now we're seeing by far the largest pullback we've seen since March. All signs indicate that the up leg completed and is now being corrected. And if we apply any kind of logic to what this correction should be, we see that it's too small, both in terms of time and size. At this point, we expect it to continue lower before it ends. But again, we do expect this to ultimately prove to be a counter trend pullback and give way to further strength. Let's go ahead and zoom in on September's pullback here. This is it. You can see the pullback so far is a 3-wave move. It's hard to say if it's going to stay that way or if it will ultimately develop into a 5-wave move. That is to be determined. If the SPY moves above 334 at any point, we know that this is a counter trend 3-wave move, right? Because that would move high enough to indicate that we're not getting a 5-wave decline, and that would tell us that this is a counter trend pullback in September. One way or the other, we expect this move to prove to be a counter trend affair. And so let's kind of dive in on the reasons why we believe that this should be a counter trend affair. Let's go ahead and get back to this chart here that puts us, this chart here that would put us in a 5th wave advance off that 2009 low. Now, if this was a 5th wave advance, what would we expect from it, right? What would we expect to see before this thing ends? One thing we could do is we can look at the other trendy moves in this advance. This move here off the 2009 low, the first wave, this move here doubled the value of SPY, and it took about a year to play out. If we look at the 3rd wave advance, that actually was about a 250% increase in value, and it took over 7 years to play out. If we look at this move here, it's lasted about 5.5 months, and it's added about 65% to the value. So currently, it's very small relative to the other up legs. That's one reason that we don't believe that this could mark an end to a 5th wave high and usher in a bear market. The other reason is, and it's a little bit abstract, so please follow along here, is that other sectors of the market have given us a much different kind of price action in 2020. Okay, so while QQQ and SPY and DIA and all those other indexes have been going nuts to the upside, other ones have not. They've gone more sideways. Let me give you an example here. This is XLF. This is the financial ETF that we follow. So if we look at it, we see that this actually looks like a counter trend move. You look at the first leg off of March's low, and it's a very clear 3-wave move. Since then, it's been heading sideways. We believe to be in a B wave right now, but whatever the case may be, we have to believe that this recovery is going to continue, because the pullback off of the recovery high, which occurred, the pullback that's occurred off of June's high here is very clearly not the resumption of any larger downtrend. It's a counter trend move. So if it's a counter trend move, it can only mean that this recovery is going to continue, which tells us that once this B wave down completes, we're going to get a large C wave up. Now, to me, that's going to equate, I can't imagine that we're going to get a big C wave up on XLF or on financials and start a new bear market on the NASDAQ or the S&P 500. It just doesn't work that way. So the belief is that we are going to continue higher once we get a correction of this 5-wave advance off of March's low. Again, it looks small right now, but we expect once it gets larger, finds a low somewhere in this yellow support area, we are going to expect the resumption of the advance. Right now, got to think we're going to get a larger pullback. So that's our take on the S&P 500, the market in general, and where we think things are going to go from here. Now let's go ahead and shift our focus over to the Nifty 50. for the folks that are looking for that. So we've looked at this guy before. I think we looked at it about a month ago, so I'm just going to provide a quick update. This is the long-term time frame off the 2016 low. We have a very nice 1, 2, 3, 4, 5 wave move completed in 2019. From there, it gave us a massive 3-wave pullback into the 2020 low and has since been recovering very strongly. Over that time, it has retraced more than 61.8% of this pullback, which is a good sign that this is a counter trend move and that the trend has turned up to the upside. So let's go ahead and zoom into the 2020 advance to see where that puts us. This is the same labeling that I used a month ago. It still applies. We had a leading diagonal first wave. We had a second wave pullback, a pretty extended third wave advance. It's been really strong. And off of the late August high, we've seen a little bit of sideways action, a fairly large down day today, but this appears to be a fourth wave pullback that is taking place now. We continue to expect higher prices on Nifty. We expect a larger pullback probably in the near term, but as long as it stays above 9,900, and I would be surprised if it got anywhere close to that, we're going to expect another up wave once this fourth wave completes to give us a 5-wave advance. At that point, you're talking about a larger pullback because anytime you complete a 5-wave move in one direction, it gets corrected by price action in the other direction. So that's what we're looking at, folks. I don't think it's bad news. I think overall the stock market looks good. I just don't think this is a buying opportunity right now. I think you need to be a little bit skeptical as far as near-term trading opportunities go, because really as the market goes, so do most stocks and ETFs. So be careful. Wait for this pullback to complete. It looks like it should take longer and be deeper before it's done. But once we start seeing the resumption of strength from there, it will look like a solid buying opportunity. So hopefully that's helpful. Like I said, we do this stuff every day at TrendLizard.com. Come visit me. We'll show you how we do Elliott Wave on a day-to-day basis. So have a great day. Take care. We'll talk to you soon.